Yo, what's up, you guys? Welcome back to another weekly market update where we will be taking a look at the NASDAQ, the Dow Jones, the S&P 500, as well as gold from both a technical and a fundamental perspective. If you do enjoy the content, please do consider smashing that thumbs up button to help the video as well. Without any further ado, guys, let's first go over some of the questions that I received based off yesterday's video. And let's go through this. Let me close this. So here we go. So let's go back 17 hours, 1821. There we go. Here we go. That GU trade, Mr. Way saying that GU trade I was in, I made good figures. Thank you. Do you think BRICS agenda will affect the dollar? Example, if they create their own currency? Yes, it will. Think of it in this way. BRICS is going to be a competitive currency against the dollar index. The dollar index is considered a global currency. So competition is always good. That means when the BRICS is created, it will definitely affect the dollar. But I'm very exciting to see how it's going to benefit consumers from there as well. Mr. Kenneth Amali saying, thank you very much, Rolio. Can you please add GER30 to the watch list? No problem. Let's add GER30. There we go. Boom. Target reach. See, you guys must just follow these breakdowns. These breakdowns, they just come. Any case of do that. Hey Rolio, what happens when CPI does not print red or green figures like that month over month, but increased from 2% to 6%? Without green and red? I was looking for entries, but I was scared even when DXY was not volatile as usual during the CPI numbers. So remember, it's important to understand that sometimes market volatility doesn't take place when the news happens, but it will always take place when that's the NY open. So it's very important to remember, two things. The first thing is you don't ever want to trade high impact news 30 minutes before or 30 minutes after the news events are released, which is why I trade news in the following week. So last week's news I'll be trading with the literal part of this week, probably just on Tuesday, because on Wednesday we've got a powerhouse of interest rate, and then we've got a lot of news coming through as well. The important thing is it's better to stay out of the market once news has been released. Sorry about that. It just gives you a better edge in the market, and then the reason why you want to do that 3-minute wait is because you're first going to pay for swaps, and you also have a higher risk of losing your money because the market continues to be volatile for quite some time thereafter. Mr. Arthur, thank you very much, especially about USD CAD. I did not understand why. Yes, the Canadian dollar is directly correlated with the US oil, or just oil. That's why if oil increases in value, you can expect the USD to get weaker against the CAD. Thank you. It was interesting. And you made it so simple. Very happy to hear. Mr. Noob VS Bro saying analysis is served. I'm ready for the new week. Thank you. I'm making it a habit to check your weekend analysis. Been working well for me. Thank you. You are very much welcome. I did tell myself, why every time when you say the market is going to do this and it is doing it, you are the king. Thanks. Thank you. Arthur has been digging in the archives. Thank you. Mr. Blackwall is saying, Rolio, thank you again. I'm going to buy your course very soon. I do not have a course available, but I'm putting something together for November. It's basically the end of October into November. The ghost commented, appreciated update, bro. Do you think CAD CDF is bullish long term or short term? Just to quick, I would probably see the price of oil there. So if you remember the last breakdown I did, I said we basically anticipated that break above that structure, and that is basically exactly what had happened. Wow, what do you know? Any case, I do expect the markets to do still expect a move to the upside, and till where I would probably say till there, still a long way to go for this market. Yeah. Also, any case, I guess that is the questions, guys. If you have any questions, please drop them down in the comment section below. Now we're gonna go over through the first article from CNBC. It says, yeah, Dow says, this is for Friday. The Dow says nearly 300 points Friday. S&P and the NASDAQ suffered a second straight week of losses. Says here, the stock fell Friday as investors wrapped up a volatile week ahead of the Federal Reserve policy meeting. Again, this is how the market like to play ping pong with the market. Okay, so basically now they're saying that they're waiting to see what the Federal Reserve is going to say in regards to the interest rate decision on Wednesday. It says here the Dow slid 0.83% to 34,618.24 as it at its lows. The S&P was lower by 1.22% and the NASDAQ dropped 1.56%. It says here the Dow closed out a positive week and it made 0.12% just for that week. Most of you would have probably said 0.12% is not enough. I need to make 100%. Okay, the S&P and the NASDAQ was both down 0.16 and 0.39 respectively. That says here most of the reason why the tech, so the NASDAQ and the S&P 500, they mostly have these tech companies within the 100 companies for the NASDAQ and the 500 companies on the S&P 500. It says here the IT and was the worst performing sector in the S&P 500. Adobe says was down 4%, and shares of ARM holdings were lower by 4.2%, which is why the S&P 500 took a drop. It says your auto stock General Motors was up on Friday, while Ford inched lower, thousands of members of the United States. And then you've got a long list of what's going on here. The only thing that I am interested in is basically the Federal Reserve policy meeting, and we obviously know that we expect that to take place on Wednesday. Now, if you guys do remember, I did speak about the NASDAQ on last week Sunday, and I said that we can expect this market to continue this consolidation. Then you can see this is exactly the market went up, and now it came back down once again. And now that we've got the interest rate decisions coming through, I do still expect another pull, like another wave of consolidation until the Feds had made it actually very clear in terms of what it is that they would like to do or what their plans are for the market. So we're gonna take it from there. I actually do want to use this here because that was the low of that candle, and then we're gonna use that there, and this is basically where I would expect where I do see this market play through. Alternatively, what I would like to also just point out is there is also just the possibility of us still doing this again, depending on what type of interest rate is printed. For now, definitely a consolidation expected. I will give you guys an update when the interest rates are released once again. Now, the Dow Jones was initially, if you guys remember, traded at this price over here, where I anticipated that move to the downside. The market printed broken above that level, obviously going to hit that previous structure there. And what we have now is the market had broken back below this structure. This level of here acted as a level of support, broke below that, became a resistance, broken above resistance, broke below support, and I do expect this the head and shoulders pattern to form over here now. So going into next week, what I would like to see is for the market to continue slightly lower first, and I'll show you now. So I would like to get a 0.382 to line up with this structure. So I'll take my Fibonacci from the high to the low, and this is basically where I do anticipate this market to continue slightly lower going into the new week, then pull up, and then definitely start this move to the downside. Like I said, in doing so, will the market print what's known as a head and shoulders pattern, and this is considered a bearish pattern from a technical perspective. And next up, we've got the S&P 500. S&P 500 also, we've got the consolidation, and you've probably in the article from CNBC, they were talking about why the the S&P 500 was very low last week. Again, probably just have to see this consolidation through. Alternatively, like I tell you guys always, these these stock markets are basically now dependent on the news release that is due to take place on Wednesday. Same thing. You can see most of these currencies, they are basically forming the same type of price action. Same situation with gold. I do expect us to go lower, and as we get closer to the interest rate this season, I'll give you guys a further update on that. Next up, we are going to look at the GER30 very quickly. The GER30 index. Yeah, what I do see over here is the market had just completed this W formation. Of the W formation, you expect to pull back to the neckline, and that is exactly what this market had given us. I do, however, would like to see more bullish development around this area. I'm not sure why I can't see this, but I would like to see, because what you have here now is this is also a ranging, a long ranging market, so it would be good for us to see another break above that. Would give us a good move to the upside there as well. Guys, that is it from my side. Let me know your thoughts in the comment section below, and please, to support the channel, just smash the like button. That's all. You just need to click like, because it's valuable educational content. Thank you for your time, and as always, cheers for years.